All right, but happening right this second, the 10-year Treasury yield heading for its steepest drop in more than 3 years. The 30-year yield for the week heading for the steepest decline since the summer of 2016. Why? Well, the Fed definitely plays into this. We bring in former UBS America's CEO Robert Wolf and founder of CEO 32 Advisors for analysis. The Fed. Yesterday during this hour, news breaks. The Wall Street Journal, it hits the tape that the Fed is going to change its language from, yep, we're doing gradual rates, no worries, to now we'll shift to a wait-and-see approach.
You know, I used to like it when they only spoke quarterly or when there was a rate situation. They seem to be a little bit all over the place. It feels to me they'll still do their fourth rate hike come on the 19th. And that would have been the fifth in the last, I think, 5 or 6 quarters. The really question is, what does that mean going forward? Well, you had a bit of an inverted yield curve last week, which all of a sudden says, you know, do we have a recession on the highway?
Well, St. Louis Fed President John Bullard came out today and said the inverted yield curve is the market telling the Fed it's gone too far. That's a pretty strong statement for a Fed president.
Yeah, I'm not buying that statement, although I do think we did not see this lack of what I would say economic possibility of growth coming around the corner this fast. Everyone felt really good about where we were going. No one would have expected 155. I think in the last, 35 months, we've averaged like 220 in jobs. But wages were pretty good today. Although it's only a small amount.
6 pennies.
6 cents, but it was up a few percent, which, what I would say, Liz,
but
we are crawling, okay, but we're definitely doing better.
Okay, now you've got people saying don't raise in 2
First
weeks.
Quarter.
Less than 2 weeks.
The 19th.
December.
Yeah.
Do you agree with that? Should
I don't.
Are things that bad? They're not, guys.
I don't.
They're not.
I totally don't agree. GDP has felt pretty strong. Wages feel better than we've had in the last nth years. We're still averaging north of 200,000 jobs. And I actually think this market volatility is all about trade. It's all about literally the dysfunction coming out of numerous different views out of the White House. We have a deal, we don't have a deal. Navarro says we're going to be tough on China. Kudlow says at the same time we're going to have a deal with China. There's no straight, you can't get straight talk out of who's supposed to be the best deal maker.
I want to be clear to people who might not fully understand why the Fed funds rate matters. It increases, if it's hiking, it increases the cost of borrowing. That's as simple as we can put it. So people think, oh, if it gets to be more expensive to borrow money, then we've got a problem. The economy will slow down. This is going to cost too much to do business. But in healthier times, that rate should be higher. So right now, does it surprise you that here leading up to this week, everybody had thought there would be 3 rate hikes next year? Fed funds futures are now pricing in less than 1 chance of a single rate hike in 2019.
Yeah, I think over that surprises me because I was probably bid 3, offer 4, and now I'm bid 2, offer 2. It feels to me like there'll be 2 next year.
Do you worry about the markets today? We've got the Dow down 523.
Of course you have to worry because we are down for the year. We're down 10% off the highs. And right now, and this is not a disrespect to President Trump, but going out and saying, I'm the tariff man, okay, that is not logical. Tariffs are a tax. A tax gets passed to the consumer. We're the largest consumer nation in the world, 75% of our economy. And I know you're going to have Steve Forbes, okay? And Steve will tell you that tariffs are a tax. And this is someone that believes in, cutting taxes. So
Larry Kudlow said it too, but at a certain point, if you're treating, my dad being a doctor used to say, if you're treating the patient with the same medication and it's not working, change the medication, and maybe President Trump has changed the medication.
But there are other ways to, have a, what I would say tough love with China. You could go back into TPP, which is 11 countries around ex-China. Okay, so that was the trade partnership with APAC. You could look at economic espionage. If they're stealing stuff, have the FTC go after them.
And he is. In fact, they've lured people to Amsterdam and arrested 12 Chinese nationals, and then you see the arrest of Huawei. We've got to run, but thank you so much.
Congratulations. I mean, I love all the success.
Yeah,
fantastic.
the show is, what, You said it.
Number one
show.
Keep it going.
Market afternoon, most important hour of trade, and we owe it all to you guys and Robert Wolf. Thank you so much.